Hey guys, in today's video, I'm going to break down the exact trading strategy that I use to get funded with prop firms like FTMO and receive payouts. I know a lot of you have been asking what trading strategy that I use, so I want to give you guys a full breakdown and help as much as possible. And stick around to the end because I'll be giving away my personal trading checklist, the same one that I use to find higher probability trades. So if you appreciate this content, drop a like and let's get into it. So in a nutshell, I'm a trend trader. So I trade with the trends and I enter on retracements or pullbacks, expecting the market to continue further in the same direction. That's it. It's pretty simple, not too complicated. I would say this is a common strategy that's been used for a long time, and it works on all time frames and all markets. However, the one thing I would say that makes this strategy even more powerful is the use of multi-time frame analysis, which is just a fancy way of saying I look at different time frames to confirm my bias and find better entries. So I usually hold my trades from a couple hours to a few days, and I can trade all the currency pairs and metals. Let's go through step by step my entire process before I take a trade. So the first thing I do in the morning is I scan the 1 hour chart across multiple pairs to find trending markets. Since I'm a trend trader, I'm only looking for clear trends and I'm pretty much ignoring everything else. A strong trend usually looks like this: higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. If I see that in the charts, I flag it as a potential trade. So the next step is multi-time frame alignment. So now that I've found some potential pairs to trade, I will try to narrow this down even further. I don't just jump into any trade, I want to find those A+ setups. So to do this, I use multi-time frame analysis, making sure that the higher time frames align with the lower time frames. I usually zoom out to the daily or the 4 hour to understand the bigger picture of what's happening in the market. I want to try to understand what's the story here. So what are the institutions doing? What are the big moves that are happening? Is price in an expansion phase, retracement, or range? Are there any key levels in play? So this is important because, for example, on the 1 hour chart, a market might look like a strong uptrend and a great entry, but when you zoom out to the daily, you realize that it's actually just a range and you're about to buy right into a major resistance. So this is why this step is super important. So for step 3, I'm looking for the trend maturity and reversal signals. So once I've confirmed the trend, I usually ask myself, what stage is the trend in? So is it in an early trend, just starting out? Is it in a mid trend? Or is it in a mature trend, which might be weakening or potentially reversing? So I don't want to enter when the trend is exhausted or showing signs of a reversal. So if everything looks good, I then move into the next step. So in step 4, it's now time to find a high probability entry. So I usually drop down to the lower time frames like the 1 hour, 30-minute or 15-minute charts, whichever gives me the clearest setup. So I normally use a few tools for my entries, and I usually want to find a minimum of 3 confluences. So for example, I could use moving averages for dynamic support and resistance. I could use key support and resistance levels, trend lines, Fibonacci retracements, or even candlestick patterns like engulfing candles or pin bars. For a trade to be a high probability trade, I need a minimum of 3 confluences. A great entry for me would be something like prices bouncing off a moving average. There's a key level of support that aligns with the Fibonacci retracement level, and there's a bullish engulfing candle. So that's 4 confluences, what I would call a A+ setup. So in step 5, I'm waiting for confirmation. So now that I have a potential entry, I don't just enter the trade blindly. I want to wait for confirmation to enter. So I wait and ask myself, how is price reacting to my level? So to do this, I look at candlesticks. Candlesticks give me the most up-to-date information. If price smashes through my level with a strong bearish candle, I probably don't want to enter. But if I see bullish confirmation like an engulfing candle or pin bar, or maybe wicks rejecting that level, that's my entry signal. So step 6 is all about risk management. And for my prop firm accounts, risk management is really key. I usually risk less than 1% per trade, and my stop loss is usually below the previous structure or 30 pips away. My take profit is set before the previous swing high. And in terms of risk to reward, I usually aim for a 1 to 2 or a 1 to 3 risk to reward. However, if that's not possible and it's still a good trade, I will take a 1 to 1 risk to reward, but never lower than 1 to 1. So the last step is trade management. And once I enter the trade, I usually let it play out. I don't micromanage my trades. I don't move my stop loss unnecessarily. I don't interfere unless something major changes. So the trade either hits my take profit or my stop loss, that's it. By the way, you guys might like this video here where I rank the best and worst trading strategies to use with prop firms. As promised, if you guys want my personal trading checklist for this strategy, you can download it in the description below. If you guys found this helpful, please leave a like and let me know in the comments below what type of strategy you use. I'd be keen to actually know. Thanks for watching, and I'll see you guys in the next one.